Welcome back to Next Gen Digital Finance, your go-to channel for mastering money in the digital age. Today we're diving into one of the most talked about and misunderstood investment vehicles in 2025, cryptocurrencies. Is crypto still worth your attention? What are the smart ways to invest in it this year? And most importantly, how do you navigate the volatility and risks that still surround this digital asset class? Let's break it down step by step. In today's episode, we'll talk about investing in crypto in 2025, what you must know before buying. Quick disclaimer. This video is for educational and entertainment purposes only. I'm not a financial advisor, and this is not financial advice. Always do your own research or speak with a licensed professional before making investment decisions. The 2025 crypto landscape. What's changed? 2025 isn't 2021. The crypto world has grown and matured. 2025 is a pivotal year for crypto. We're seeing increasing institutional adoption, with major players like BlackRock and Fidelity heavily involved in Bitcoin ETFs. This brings more liquidity and stability. Plus, regulatory clarity is finally emerging in many regions, fostering greater investor confidence. These trends are shaping a more mature, yet still highly innovative market. The SEC, EU, and even countries like Brazil and Japan now have clear crypto regulations. While this scared off some speculative traders, it built trust for long-term investors. Crypto is no longer fringe. We're seeing real-world use cases, from stablecoins used in cross-border trade to blockchain-based identity systems. Institutional players, BlackRock, Fidelity, and JP Morgan are now deep in the game, offering crypto ETFs and custody services. Don't forget, Bitcoin's latest halving event has kicked in, tightening supply and historically triggering price rallies. So the market in 2025 is more regulated, more legitimate, and more connected to the traditional economy. Top cryptocurrencies to watch. Here are 5 cryptocurrencies that deserve attention in 2025. Number 1, Bitcoin. Still the king. Scarce, deflationary, and increasingly a store of value like digital gold. Many institutions now hold BTC on their balance sheets. Bitcoin remains the undisputed king. It's the original digital store of value, often compared to digital gold. With increasing institutional interest and the impact of the 2024 halving, Bitcoin's long-term value proposition is stronger than ever. It's a cornerstone for any crypto portfolio. Number 2, Ethereum. With Ethereum 2.0 upgrades complete, it's faster, cheaper, and more scalable. It remains the foundation of DeFi and Web3. Ethereum isn't just a cryptocurrency, it's a vast ecosystem. As the leading smart contract platform, it powers decentralized finance, DeFi, NFTs, and countless dApps. With continuous upgrades and its transition to proof of stake, Ethereum is becoming more scalable and energy efficient, making it vital for the decentralized web. Number 3, Solana. A comeback story. After outages in 2022, it's now one of the fastest, most efficient chains for developers and dApps. Looking for speed and low fees? Solana has emerged as a serious contender, offering incredibly fast transaction speeds and a rapidly growing ecosystem for DeFi, gaming, and NFTs. Its strong performance makes it a popular choice for developers and users alike. Number 4, XRP. XRP focuses on facilitating rapid, low-cost global payments. It's gaining adoption among financial institutions for its efficiency in cross-border transactions. With ongoing regulatory clarity, XRP's utility in real-world finance continues to expand. Number 5, Chainlink. Powers decentralized data. As more real-world assets go on-chain, Chainlink's role in connecting real data to smart contracts becomes critical. Number 6, stablecoins. USDC, USDT, not for growth, but for yield farming, cross-border payments, or parking capital during volatility. Honorable mentions: Polygon, Arbitrum, and emerging AI-integrated token. Best ways to invest in crypto in 2025. There are multiple entry points, some passive, some active. Buy and hold, hodl. Buy Bitcoin or Ethereum through trusted exchanges like Coinbase, Kraken, or even newer DeFi native platforms. Store long-term in a cold wallet, e.g. Ledger or Trezor. Crypto ETFs. Want crypto exposure without the complexity? In 2025, Bitcoin and Ethereum ETFs are now live and regulated. These are ideal for retirement accounts or brokerage accounts. Staking. Stake ETH, SOL, or ADA and earn passive income. Staking yields range from 3 to 10% depending on the network. DeFi yield farming. Advanced users can use protocols like Aave, Curve, or Pendle to earn yield on stablecoins or other assets. Caution, smart contract risk is real. Decentralized finance continues to evolve. DeFi aims to address scalability, security, and user experience issues of earlier DeFi protocols, offering more robust and user-friendly financial services. Auto investing, DCA. Apps like Swan Bitcoin or Coinbase now offer auto investing, perfect for dollar-cost averaging and reducing emotional buying decisions. Instead of trying to time the market, invest a fixed amount regularly. This strategy reduces the impact of volatility and can lead to a lower average purchase price over time. Risks you need to know in 2025. Crypto isn't risk-free. Here's what to watch. Regulatory crackdowns. While the landscape is clearer, governments still intervene unexpectedly. Stay informed. Rug pulls and scams. DeFi may be mature, but shady projects still exist. Always vet tokens and teams. Volatility. Even Bitcoin still sees 20 to 30% swings in short periods. Don't invest more than you can afford to lose. Crypto is volatile. Don't get caught up in daily price swings. Focus on projects with strong fundamentals and hold for the long term. Patience is your best friend here. Custody risks. Not your keys, not your coins. Keep long-term holdings in cold wallets, not exchanges. How to build a smart crypto portfolio in 2025. Here's a simple structure for beginners. 60% BTC ETH, the core long-term bets. 20% altcoins, Solana, Link, newer innovations. 10% stablecoins for yield or emergency use. Mobash or traditional assets. Diversification still matters. Bonus tip. Use portfolio trackers like CoinStats or Zapper to monitor performance and risk. And always rebalance quarterly. Where to buy crypto safely in 2025. In 2025, regulation has matured, and so has the list of trustworthy platforms to buy crypto. But that doesn't mean you can trust every app or website that offers Bitcoin. Look for established exchanges with strong security records and good customer support. Options like Kraken, low fees, Gemini, security, experienced traders, Coinbase, beginners, and Crypto.com, mobile-friendly, are popular choices in 2025. So let's break down some legit, secure, and beginner-friendly options, whether you're in the US, Latin America, Europe, or Asia. Number 1. Coinbase, US, and 100+ countries. One thing. Why it's trusted. Publicly traded on the NASDAQ, ticker COIN. Regulated under US law, and compliant with AML KYC standards. Features: easy to use, mobile app, recurring purchases, staking, ETH, SOL, etc., and crypto-backed debit cards. Necessary in 2025, integrated Layer 2 support via Base, Coinbase's own blockchain, giving users lower fees and faster DeFi access. HAIE, downside, higher fees than some pro exchanges. Best for beginners and those who want a regulated, US-compliant experience. Number 2, Kraken, global, especially US and Europe. Why it stands out. Kraken has never been hacked. It's praised for robust security, transparent fees, and legal compliance. Features: pro trading tools, staking, margin trading, and fiat deposits via Bankwire or SEPA. New in 2025, launched its own native wallet with hardware integration for self-custody users. Best for intermediate to advanced users who want both safety and deep trading features. Number 3, Binance and Binance.US, global, but varies by jurisdiction. Why it's huge. Binance is still the largest exchange by volume, offering hundreds of cryptocurrencies and low fees. Features: spot trading, futures, staking, launchpads, and AI-based trading insights. Caution: Binance has faced legal challenges in some regions. Make sure you're using a regulated local version, like Binance.US. New in 2025, deeper integration with third-party wallets and support for AI-related blockchain tokens. Best for experienced investors looking for a wide range of tokens and low-cost trading. 4. Gemini, US, with global reach. Founded by the Winklevoss twins. Regulation: fully licensed as a New York trust company. Features: simple app, interest earning options through partner platforms, and multi-layer security. New in 2025, partnered with banks for easier fiat on-ramps and interest-earning stablecoin vaults. Best for US-based users who want strong compliance and clean UX. And 5. Bitstamp, Europe and international users. Established in 2011, one of the oldest surviving exchanges. Regulated in Luxembourg and operates across the EU and Asia. Features: low fees, institutional-grade custody, support for SEPA and bank transfers. New in 2025, added support for tokenized stocks and RWA, real-world assets. Best for European investors looking for a trusted and transparent platform. 6. Cash App, PayPal, Robinhood US, only limited access. Why popular? They offer crypto with a few taps, very beginner-friendly. Smooth. And downside: you often can't withdraw your crypto to an external wallet, except BTC on Cash App. Good for exposure, but not ideal for long-term holding or active investing. Best for first-timers who want to experiment with small investments. 7. Ledger Live plus hardware wallet Ledger or Trezor. Why it's important? For serious investors, keeping crypto off exchanges is critical. A hardware wallet stores your private keys offline, making it nearly impossible for hackers to access. Ledger Live. The companion app lets you buy crypto through integrated partners like MoonPay or Banksa directly onto your cold wallet. New in 2025, improved user interface, mobile syncing, and native DeFi access for staking and swaps, all while staying self-custodied. Best for long-term holders and privacy-conscious investors. Key tips for choosing a platform in 2025. A metrics. 1. Check regulation. Make sure the platform is licensed in your country. 2. Use 2FA, two-factor authentication. Don't rely on passwords alone. 3. Understand custody. If you're not using a cold wallet, your assets are held by the company. Know their security track record. Avoid new and flashy apps. If it's not battle-tested or lacks real user reviews, stay away. At the end of the day, it's not just about what you invest in, but where and how you invest. Choosing a secure platform could be the difference between building wealth and losing it overnight. Always stick with trusted names, use proper storage tools, and never invest more than you're willing to lose.
So is crypto still worth it in 2025? Absolutely, if you invest smart. The space has evolved into something far more robust, but education and caution are still your best friends. If you found this video helpful, give it a thumbs up, subscribe for more modern money content, and share your crypto strategy in the comments below. Thanks for watching Next Gen Digital Finance, where the future of finance starts now.